It's been a rough ride for Anil Ambani's companies. For the third day in a row, shares of Reliance Power hit the 5% lower circuit, plunging to a low of Rs 31.1 on the exchanges today. And it wasn't just Reliance Power. Reliance Home Finance and Reliance Communications, also part of Anil Ambani's led group, weren't spared either. They too plunged, hitting their lower circuit limits at Rs 3.8 and Rs 2.32 respectively. But why is this happening? What's causing the turmoil? Let's dive in. On August 23rd, the Securities and Exchange Board of India made a major announcement imposing Rs 624 crore penalty on Anil Ambani Group Chairman Anil Ambani and 24 associated entities. The reason? Allegations of siphoning off funds. Let's break down what's really going on, and for that, we'll have to go back to when it all started. In 2017, housing finance companies were doing well, and many investors felt confident investing in Reliance Home Finance Limited, thinking they had made a good choice. But as a year went by, the stock did not perform as expected, and troubling news started to surface. First, we heard about funds being misused. Then reports emerged about the company's top leadership, especially Chairman Anil Ambani. It was revealed that he had been approving huge loans without following the proper procedures. These loans were supposed to be for the general business needs, but instead they were being used to pay off old debts. Even more concerning, the companies receiving these loans were suspiciously connected to Anil Ambani and had little to no assets backing them. In June 2019, the company's auditor suddenly resigned, citing several irregularities. And the most shocking discovery was that the loans for general corporate purposes had increased from Rs 900 crores in March 2018 to Rs 7,900 crores by March 2019. That's Rs 7,000 crores in just 1 year. That was a clear sign that something was very wrong, and the stock price started to crash, eventually dropping to just Rs 0.75 by March 2020. By 2021, SEBI found more problems and banned Anil Ambani from the markets. Investors started to panic and sold their shares at a loss. In 2024, SEBI uncovered another major issue. Rs 8,470 crores in loans were given out by Reliance Home Finance to 45 related companies, all without proper checks. Shockingly, these loans were given out on the same day, and 41 of those companies shared the same email address. Then on August 23, 2024, SEBI took action against Anil Ambani, fining him Rs 25 crore and banning him from the securities market for 5 years. The CFO Amit Bapna was fined Rs 27 crores, CEO Ravindra Sudhakar was fined Rs 26 crores, and senior executive Pinkesh Shah was fined Rs 21 crores. Additionally, 45 companies involved in loan schemes were each fined Rs 25 crores. But this case is not over yet. Why? Because Anil Ambani has a clever legal move in play. Ambani's legal team has invoked something called moratorium provision under the Indian Insolvency and Bankruptcy Code to challenge SEBI's ruling. Now, what's a moratorium? It's essentially a pause on loan payments or interest, usually offered to borrowers who are struggling financially. But it's not just a straightforward break. The moratorium is designed to give a struggling company some breathing space to sort out its finances and hopefully bounce back. However, when it's used to delay regulatory actions, it creates a complex situation. This sets up a legal tug of war between the IBC, which focuses on helping companies recover, and SEBI, which is dedicated to protecting investors and ensuring fair market practices. Now, SEBI recently dismissed Anil Ambani's argument that the moratorium should halt further actions. SEBI made it very clear that the moratorium doesn't stop its effort to prevent fraud and ensure fair markets. SEBI's ruling was firm. A moratorium cannot shield anyone from accountability. Consequently, fines must be paid, and those involved in the fraud are banned from the markets for 5 years. The future remains uncertain for the investors who have parked their funds in the Anil Ambani group companies. While penalties might help restore some market confidence, the company's damaged reputation and financial health pose significant challenges. In conclusion, SEBI's decision to ban Anil Ambani from the stock market is a landmark event for corporate India, showing that no one is above the rules. Reliance Power, Reliance Home Finance, and Reliance Communications have all hit their lower circuit limits, showing serious issues after SEBI's action. From an investor perspective, the situation is concerning. With the stocks plunging and the company facing significant penalties and regulatory scrutiny, the future remains uncertain. Now, Ambani and ADAG Group need to deal with SEBI's concerns, rebuild trust with investors, and handle the consequences of the ban. The way they manage this will impact their future and set an example for business practices in India. Having said that, this is me, Aditi Priya, signing off.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.